So you're finally thinking about buying a house, but the problem is you have no clue where to start. And maybe you've mentioned it to a few people and they all seem to give you scattered advice on what you actually should be doing. They start throwing around words and phrases and you have no clue what they're talking about. And even worse, some of the advice that you're getting from people ends up contradicting each other. So you run to Google in hopes that maybe you can find some type of step-by-step guide on how you actually buy a home from start to finish. And after reading those 10-page articles, you're even more confused now than you were in the beginning. So if that sounds like you, you're in the right place. In this video, I'm going to give you a clear step-by-step process to buying a house. And my goal is to relieve you any uncertainty or any confusion you may have about the whole process. So let's get started. The first thing you'll need to do is make sure you're actually ready to buy a house. And that's both emotionally and financially. Emotionally, you have to understand that until this point, this may be the largest purchase you've ever made in your life. And not only is it the largest purchase, but it's a long-term commitment. And when I say long-term, I'm talking about a 30-year commitment. Although technically it's not required that you live in this home for 30 years, but it's still a major decision you have to think about. Because when you own a home, it's not as easy as just pick up your things and move. And if constantly moving and bouncing around from place to place is something you've been accustomed to, you must come to the realization that those days are now over. And unless you're purchasing a second home or some type of investment property, you may be in a situation where you actually have to sell your property first before you even think about moving somewhere else. And that could definitely take time, which makes the entire moving process a little more difficult. So really think about if you're prepared to live in this home for at least a few years. You also want to take in consideration any short and long-term career goals you may have or any family obligations. You're going to have to ask yourself if you foresee any one of those two things causing you to have to relocate anytime in the near future, because you can't ignore the external factors that play a major role in the decision-making process. So overall, just know that buying a home is a big decision and it takes very careful consideration. And without clearly understanding your reasons behind buying a home, you run the risk of regretting it somewhere down the line. And that's an experience you definitely don't want to have. Now, when it comes to being ready financially, there's a few areas you definitely want to look at. First, aim to have at least 3 to 6 months of your expenses set aside in some type of emergency fund. And that's on top of whatever you plan on spending on your home. Because I can't stress how important it is to have a safety net in place anytime you're making a major purchase. Because here's what you have to understand. Once you become a homeowner, you are now the landlord, which means paying for repairs is 100% your responsibility now. So if the hot water heater decides to break and stop working 2 weeks after you move in, you'll be prepared because you have that emergency fund to take care of those type of unexpected expenses. And trust me, as soon as you buy a house, something will go wrong. And if you ask any homeowner you know, I'm sure they'll agree with me 100% of the time. Okay, so now the next area you want to look at is your income and your work history. Because when getting a loan, the lender not just looks at your income, but they also want to look at your work history because they want to make sure that that income that you have coming in now is something that they know is stable. In most situations, they view 2 years as a stable income. So start putting together your income documentations so you can show the lender that you have some type of steady income. Now, if you're on payroll, typically you'll have to submit your paycheck stubs and your W-2 forms. But if you're self-employed, you will have to submit your tax returns and any other documentations the lender requests. Usually it's your business financials, that way they can see what type of steady income you have coming in. And steady income for somebody self-employed doesn't mean necessarily monthly income coming in, but more or less what are you making year over year. So getting all these documents together will help simplify the loan application process and increases your chances of getting approved for your loan. The next thing you want to look at is your debt to income ratio, also referred to as DTI. So your DTI is something the lender will use so they can see how much of your income is actually going towards debt right now and helps them identify how much more debt you'll be able to take on. And this is calculated by dividing your monthly debt by your monthly income. So if your monthly debt is $3,000 and your monthly income is $6,000, that just means your debt to income ratio is 50%. It's that $3,000 divided by that $6,000. And the debt that the lenders are using are whatever shows up on your credit report. In addition to your DTI, some lenders use your house expense ratio as well. That's also referred to as a front-end DTI. And which one they use just depends on what type of loan you apply for. This ratio divides your monthly house payment by your monthly income. And that's going to include principal, taxes, and interest. So if the monthly house payment is $1,200 and your income is $6,000, that means your housing expense ratio is 20%, which is the $1,200 divided by the $6,000. So I highly recommend you look at your debt to income ratio before you even think about applying for a loan. And in most cases, to qualify for a mortgage, the lender just wants to see a DTI of 43% or less. And again, each lender has the right to have their own requirements, so just use that number as a gauge. The next area you want to look at is your credit score. Your credit score is a crucial factor in determining what loan options are even available for you. So what they'll do is they'll use your credit score along with all the other previous factors I just talked about to determine the likelihood of you being able to pay back your loan. Because at the end of the day, that's all they care about. They want to make sure they get their money back. So the higher your credit score, the higher your chances of getting a loan and also the best rates available. You'd be surprised on how much of a difference an interest rate makes when it comes to how much you pay for the total loan. So what you want to do is you want to get your credit score and your credit report, and you can get that from any one of the major agencies. And those are Equifax, Experian, and TransUnion. You can actually get a copy of your credit report for free once a year. You may also be able to get your credit report from your bank or maybe your credit card company for free as well. So when you get the report, you'll see that your credit is broken into several categories. You have your payment history, the amount of debt owed, length of credit history, types of credit used, and your pursuit of new credit. So you want to make sure you individually work on each of these areas. So to qualify for most loans, lenders require a minimum credit score of at least 620. And if your credit score is above 720, you'll probably get the best loans available. If you think your credit score is going to be an issue, definitely check my page and watch the video I made on how to improve your credit score, because your credit score is very important in this process. So the next thing you want to do is figure out how much house you can actually afford. So setting a realistic budget for your new house is the best way to figure out what you actually afford and how much your total cost will be. Because when owning a home, there are additional costs you have to consider that just aren't present when you're renting. Things like property tax and homeowner insurance are definitely things you want to factor into your budget. Because paying for your house is a lot more than just paying your monthly mortgage. I would recommend using some type of home affordability calculator, which you can easily find on the internet, because those factor in your income, your debts, the location of the home, and your down payment to give you a clear estimate of how much your monthly mortgage will be. Because remember, this is a long-term commitment, so this monthly payment has to be something you can manage. And a good calculation is to use the 28% rule. And this is just a guide that says that your monthly mortgage payment should not be more than 28% of your gross monthly income. And I understand with the way the housing market is now, it's not always achievable to reach 28%, but just still have that as a guide and try to get as close to that as possible. The next thing you'll need to do is start saving for your down payment and your closing costs. And when it comes to saving for your home, there's multiple places you could do it. You could save cash, you could use savings accounts, you could use investment accounts. Any account is fine as long as you have access to the money. Additionally, if you have family members that are willing to help by providing financial support, you may also be able to use their gift money towards your down payment. And when it comes to how much you should actually be saving, it's important to consider all the expenses that are related to buying a house. And then you have to determine how much you want to put aside for each one of those expenses. The big major one will be your down payment. Your down payment is a lump sum of money that you put towards your purchase price. Lenders typically require a down payment to reduce the risk that they have in the event you don't pay for your mortgage. And contrary to popular belief, a down payment of 20% is not required when you're buying a home. And I understand that 20% down payment discourages a lot of people from even thinking about buying a home. For instance, you could get a conventional loan with a 3% down payment, and you can get an FHA loan with a 3.5% down payment. And regardless of how much the house is worth, paying 3% is a substantial difference than paying 20% as a down payment. And if you're eligible for a VA loan or USDA loan, those require 0% down payments. Just understand that a large down payment does have its advantages, such as more mortgage options, lower monthly payments, and lower interest rates. And if you make a 20% down payment on a conventional loan, you are not required to pay mortgage insurance. So that's something to definitely keep in mind. The next major expense you'll need to save for are your closing costs. And these are just the fees that are associated with getting a mortgage. And unfortunately, closing costs sometimes gets overlooked by the buyer. And the amount you'll have to pay will vary, but typically it's about 3 to 6% of your loan. So if you get a mortgage for $200,000, just plan for your closing costs to be somewhere between $6,000 and $12,000. So you can obviously see why that's something you don't want to overlook. And these costs include your appraisal fees, title insurance, and other funding fees. So what will happen is before you close your loan, you'll get what's called a closing disclosure. And this will outline all the costs that you'll need to pay at closing. It's so important to review this document to make sure it's accurate, because the last thing you want to do is pay for something that you didn't have to. And I'm sure your real estate agent will be able to help you out with that as well. So now that you know how much house you can actually afford and you save for your down payment, next step is to put together your wish list. So it's important to know that finding a house that has every single feature that's absolutely perfect is pretty much not feasible. So right out the gate, throw that expectation out the window. So what you have to do is put together a list to figure out what you're willing and not willing to compromise on. So to make this as easy as possible, just separate your preferences into 3 different categories. First are your essentials. These are things that are not negotiable. That means if the house doesn't have it, you're moving on. Let's say the house you want has to have at least 2 bathrooms. Then you already know if you run across a house with 1 bathroom, you won't even waste your time. Next category are your desirables. These are things that are really important, but not critical. And then you have your bonus category. This category is important because if you ever run into a situation where you have 2 homes that you're looking at and they're very similar, that bonus category can make a difference of which one you choose versus which one you don't. So let's say you run across 2 homes, they're almost identical, but one has a lemon tree and the other one doesn't. And you love lemons, you cook with lemons, you drink lemon water in the morning. That bonus category will make a difference for you. So when you have a clear understanding of your priorities as far as what you want out of a house, you'll save yourself a lot of time. So your primary considerations for your home should be around factors of the home that can't be easily modified. Because as time goes on, there'll be parts of your home that you can change and make more of your liking, but there's factors that you can't change or it'd be way too expensive to even think about changing. Those are things like the size of your backyard, the square footage of the home, the quality of the foundation, and again, the numbers of bedrooms. So it's important to consider all these factors when you put together this wish list. So the next step is when you really start to enter into the home buying mode, and that's finding the right mortgage. So choosing the right mortgage not only increases or decreases the chance of you getting approved, but it can also save you or cost you a ton of money throughout the life of your loan. So what you want to do is consider the pros and the cons of each loan that's available to you. And some of the main types you'll run across are your conventional loan. So those loans aren't backed by the government. They offer lower down payments, but they have stricter qualifications. Then you have the FHA loans, which are backed by the Federal Housing Administration. These are genuinely easier to qualify for, but you will have to pay mortgage insurance. And then you have the VA loans, which is for active or former service members or their spouses. And there are other loans available, but those are the ones you'll see the most of. You'll also have to choose a mortgage type because you can do a fixed loan or you could do an adjustable loan. Adjustable loans are also referred to as ARM. So pretty much fixed loans are a fixed interest rate. It stays the same, your payment stays the same, the life of the loan. And adjustable loans can either go up or they can go down. Another thing you'll have to choose is the term of your mortgage. Traditionally, the main mortgage type is a 30-year mortgage, but you can also do shorter terms like 10-year, 15-year, or even a 20-year. And a lot of times you'll see that shorter terms do have lower interest rates. So definitely take your time and choose the right loan for you, because choosing the wrong type of financing can turn your biggest asset into a liability. And the last thing we want is for our home to become a liability. So now as you've figured out which mortgage is best for you, it's time to get pre-approved. So to get pre-approved, you're just going to submit an application directly to the lender. And there are a ton of lenders that are available. You can use large, well-known in-person banks. You can use online banks or even credit unions. So when you start assessing these lenders, the first thing you want to look at is, do they even have the loan that you want available? So if you decide that the FHA loan is the best fit for you and you run across a lender and they're not FHA approved, just walk away. Don't even waste your time. I would also suggest comparing offers from multiple lenders. That way you can ensure that you're getting the best rates possible. Don't just go for the first person that pre-approves you. So during the pre-approval process, they're going to ask you about your current income, the assets you hold, and about the property that you're looking to buy. They're also going to run a credit check on you. The good news with that is that when you apply for several lenders at once, it only counts as one inquiry on your credit score. So you don't have to worry about all these different hits affecting your credit score when they run your credit. And when the lender requires documents from you, it will be time consuming for you to get some of the information, but keep a file, because anytime you apply for future lenders, you'll have that file ready and it'll save you a lot of time. Also, do your best to work with a knowledgeable mortgage lender, because they'll be able to educate you on various alternative options that are available for you. And also ask about any first-time home buyer programs that may be available, because that can save you a ton of money too. And once you're pre-approved, your lender will give you a pre-approval letter, and that just shows how much you're approved for. Typically, that letter is only valid for 60 to 90 days. So if you go beyond that time horizon, you will have to get it updated. And this letter is really important because it shows the real estate agent and the buyer that you're a committed buyer that already has financing. And that could put you at a strong advantage when you're competing with other buyers. So the next step is to find a real estate agent. Your real estate agent is the person that's going to represent you throughout the buying process. Their job is to look out for your best interests by actually finding you homes that meet your criteria, get you showings, and help you write offers and negotiate. Typically, as a buyer, you can work with a real estate agent without having to pay them any fees. The seller's actually the one that's responsible for paying for the real estate agents, and they do so out of the commission that comes from the sale of the property. So you definitely want to have someone that's by your side to help you navigate through the real estate market and help you avoid overpaying for your property. To find an agent, I would say start off by asking friends, family, or anyone else that you may trust. In my opinion, the best people to ask are people that just bought a home, because the whole process can be stressful and time consuming. So that person will give you the best honest opinion on if their agent actually helped them throughout the process, or if they feel like the agent just made things worse. And if you're in an unfortunate situation where you can't find a personal referral, you can always use some online resources. If you have to go that route, make sure you do research, make sure you read their background, and look at reviews from past clients. Another thing you want to look at is their current workload, because the last thing you want is the agent is overbooked because they won't have any time for you. I would advise interviewing at least 3 agents before you decide which one you want to move forward with. And although this may seem like the easiest thing to do, but do not use the agent of the seller to represent you as well. Because if you have one agent and they're representing the buyer and the seller, that's a huge conflict of interest. You're pretty much going to give up all your ability to negotiate in the future. Can it work? Yes. Would I recommend it? Absolutely not. Because if you're buying a home, you want a buyer's agent because they have experience helping buyers find homes. Because one thing that buyer agents are really good at is locating homes before they actually hit the market. And this can give you a huge competitive advantage. Also keep in mind that different agents have different levels of experience and expertise. So don't work with an amateur agent just because they're nice. And how long someone's been an agent doesn't define if they're an amateur or not. Because there may be someone that's been an agent for 10 years and have absolutely no clue what they're doing, but there may be someone else who's been an agent for 8 months, but they know real estate inside and out. So when interviewing these agents, make sure you don't settle. A professional agent will not shy away from tough questions, so ask away. So just know working with a really good agent is one of the strongest advantages you could give yourself throughout this process. Don't be afraid to come off as over picky. Remember, this is a huge investment that you're making, so you want to find someone that can help make the process as smooth as possible. So now that you have your agent, it's time to go house hunting. This is time where you move beyond scrolling through the internet to actually looking at homes in person. This is probably the most exciting time you'll have throughout the buying process. So make sure you see multiple homes. So your agent will help you find homes to actually go look at. So creating that list of your priorities will be extremely beneficial, especially since some factors may vary depending on if you're looking for a starter home or a forever home. So make sure to show that list to your agent. And don't get discouraged during this process because it may take longer than you expected to find a house that you actually like. And remember, you may not find everything that's on your wish list, so you have everything prioritized. So focus on the priorities first. Just do your best not to compromise on location. This is one thing that absolutely can never be changed about the home. So make the most of all your walkthroughs because it's a strong chance that may be the only time you get to see the home before it's time to make an offer. I would recommend taking a lot of videos and a lot of pictures on all your visits to these homes because it can get challenging trying to remember all these homes and all the different features they had. So literally the entire process could take a few months. And I just want you to be mentally prepared for that. So once you finally find a house that you actually like, the next step is to make that offer. So to make an offer on a home, you have to put it in writing in what's called an offer letter. So that letter is going to contain personal information like your name, your address, and what you're willing to actually pay for that house. Additionally, you also want to include a deadline for the seller to actually respond to your offer. That way you'll never just be left in limbo. You'll also have to include what's called earnest money, which is just a small deposit you put down, and that's going to be part of the offer as well. Usually it's about 1 to 2% of the purchase price. And that's another reason you want to have a really good agent because they can advise you on what's typical in the current market. So just know that money isn't lost, so that'll actually be added to either your down payment or your closing costs if you decide to buy the home. However, if you cancel the sales agreement after you already agreed to it, the buyer actually gets to keep that money. And as far as the letter goes, you don't have to worry about writing it yourself. Usually the real estate agent is the one that writes it for you, but you can if you'd like to. So once the letter's completed, your agent is going to reach out either to the seller or to the seller's agent and then present your offer to them. And once that letter is submitted, the buyer is going to respond back to you in 1 of 3 ways. They're either going to accept your offer, reject your offer, or send a counter offer. So with a counter offer, the seller's just coming back to you with either a new price or new sales agreements. Then from there, you have the power to accept it, reject it, or make a counter offer to their counter offer. Ultimately, just know the decision is always 100% up to you if you want to move forward with the purchase or start looking at other homes. But always keep in mind that ultimately both sides want the same thing. You want to buy the home and they want to sell the home. So this is where that list you made comes in handy because when you start negotiating, sometimes if you compromise on some little things that are really not that important to you, it can make all the difference to move the deal forward or not. And again, your agent is always there to help you to let you know when it's time to hold firm and when it's time to give in a little bit. So now as you got the offer situation worked out, the next thing you want to do is get a home inspection. Although typically lenders don't require that you get a home inspection to get approved for a loan, I still highly recommend you get one done before you purchase any property. And again, you have your agent there to help you find someone to do the home inspection, but it's very important to do your own research before you actually choose somebody. Verify that the inspector has adequate experience, read the online reviews, ask them for references from their previous clients, and always review their credentials. And the timing of the home inspection may vary depending on your contract and the state regulations, but typically you'll do it within 10 to 14 days of signing the purchase agreement. And remember, you as the buyer, you're responsible for all the costs associated with the inspection. So look to probably spend somewhere around $300 to $500. And again, make sure you confirm these details within your specific contract and your state requirements. So what a home inspection is just a visual assessment of the property. So their main job is to find any issues for you that you don't see yourself. Some of the main things they'll be looking at is checking the roofing condition, the electrical, and the functionality of any appliances the house may have. So you can see why it's really important to have someone that's really good at what they're doing. In addition to that normal inspection, I do recommend getting a specialized inspection as well. This inspector is going to look for things like mold, radon, check the septic system, and if there's a pool, you want to have the pool checked as well. And yes, each one of these inspections does come at a cost, but that cost is so small compared to if you bought the house and had to have those issues repaired yourself. So I would advise you doing them all. Okay, so once those inspections are done, the inspectors will provide you with a list of any problems or any issues that they found. So you and your agent, you want to go through that list and make sure you prioritize everything from most important to least important. And if you run across anything important on that list, request that the seller fix those items before closing. And if agreements can't be made, don't hesitate to walk away from the deal. Because remember, you as the buyer will be responsible 100% for everything wrong with that house after it closes. So if you can get something fixed or repaired beforehand, do so. So to protect yourself, make sure you include a home inspection contingency in your offer, because that'll give you the power to either negotiate or walk away from the deal if they're not willing to fix the things that come up from the home inspection. It'll also make sure you get a refund on that earnest money that you put down with the offer. So other than a home inspection, you also want to get a home appraisal. The home appraisal and the inspection serve two different purposes. The inspection is more for you as the buyer because it gives you an understanding of the condition of the property. The home appraisal is actually for the benefit of the lender. It's pretty much to help the lender ensure that the money that they're lending you does not exceed the actual property value. Because if the appraisal shows that the property value is actually less than what the lender's giving you, it can get challenging to secure that financing. And hopefully this doesn't happen to you, but if the appraisal does come in lower than expected, sometimes you'll have to dispute the appraisal price. So just keep in mind that appraisal is not always going to come in your favor. So if the appraisal comes in too low, the lender may reduce your financing, which just causes you to have to pay more money out of your pocket. Or you can also negotiate with the seller to see if they can lower the price for you. And because this appraisal is so important for the lender, they're the ones that actually selects the appraiser, but you're the one that's still going to have to pay for it. So because of this situation, I would also recommend you include an appraisal contingency in your offer as well. This will also allow you to walk away from the deal if the appraisal comes back too low, but at the same time, you still get a refund on your earnest money. Even though I know your agent will have your back, I think it's important for you to know what could happen and what could go wrong as well. So once you have the appraisals and inspections out the way, now it's time to start negotiating. So upon reviewing your inspection results, you may want the seller to address some of the issues in one of three ways. You can have the seller just leave everything the way it is and just reduce the price of the property. You can ask them to provide some credits to cover the closing costs, or you can request that they fix everything before closing. So once you decide on how the situation wants to be handled, your agent will send the message directly to the seller's agent. And just know that seller may agree or deny all your requests. Again, always remember that the decision to move forward or not is always up to you. So one thing that can help you when it comes to the negotiation process is to understand what type of real estate market you guys are in. If it's a seller's market, that may not work in your benefit because that seller has tons of offers. So if you walk away, they could care less. But if it's a problem that you know is going to come up no matter who they sell the home to, then that works in your favor because they're going to have to fix that and address that no matter what. But if it's a buyer's market, that'll work in your favor because you may be the first offer they got in the last 90 days, and they're just really trying to get this house sold. So those are just a few tips that you can use to help you throughout the negotiation process. All right, so now that the seller has taken care of all the issues you want them to take care of, now it's time for you to do the final walkthrough. This step is extremely important and probably one of the most critical steps of the entire process. This will be the very last time you have to inspect the home, ask any remaining questions, and resolve any issues before this property becomes 100% yours. So bring your home inspection checklist and any documents that you need to make sure that everything that was supposed to get addressed actually got fixed and addressed. Again, this is your last time to check to make sure the house is ready to be moved in. So go through, check the heater, check the AC, run the water, make sure everything is good to go. And if you do run into any issues, make sure you address it immediately with the seller so they can get it fixed right away. And yes, that may delay your actual closing date, but don't let that discourage you from getting the things fixed that were supposed to be fixed to begin with. Alright, so now you made it to the very end and it's time to close on your house. So the lender is required to give you a closing disclosure 3 days before the actual closing date. And this will include important details like your loan type, the term of the loan, your monthly payment, your interest rate, your loan fees, and the amount of money you need to pay at closing. So you want to compare that to the actual loan estimate you received to make sure everything is consistent. Also look for any errors, any discrepancies like your name being spelled wrong or something like that. If that does come up, don't let them tell you it's not a big deal. Have them change it before you actually sign the final documents. So once you've reviewed everything, you'll attend what's called your closing meeting. So to this, you want to make sure you bring your ID, a copy of the closing disclosure, and the proof of funds for your closing costs. And this is the fun part where you'll pay for everything, your down payment, closing costs, all of that will be wired over. You'll sign your mortgage note, which says you agree to pay the mortgage, and the mortgage deed to secure the mortgage note. And once that process is finished, congratulations, you are now a homeowner. So save this video because it's a lot of information, but you definitely want to have it as a reference while you're going through this process. I hope this helped. Leave any questions in the comments section, subscribe to the channel, and I will see you in the next video.